So my next guest is also named David, David Teten. He's an experienced venture capitalist. How you holding up, David?
So far, so good. Every day I'm grateful that I'm healthy, and I thank the global pandemic for giving me renewed appreciation for that.
Yeah, so tell me a little bit about raising money. Let's say you're an entrepreneur. Is it a good time to raise money right now?
It is a terrible time to raise money unless you're in the sweet spot of doing something related to COVID. Everyone is feeling poor because they are poor because the market is down. There's a denominator effect, which means that of the total amount of capital that people have allocated for investing, the public market investments have shrunk, and so suddenly the percentage allocated to privates has increased beyond what a lot of people are comfortable with. So that's also going to negatively impact fundraising. So that said, if you need money, you need money. And there are things you can do to try and increase your odds of getting capital from the people who are actively investing. And absolutely, there are people who are actively writing checks.
Yeah, so let's talk about that because a lot of people have lost money, but people who have lots of money obviously want to chase new opportunities, don't they?
Yes, absolutely. And you get the best returns when you invest when there's blood in the water, which is where we are now. And
Yeah,
of
there
course, I don't
is.
want to sound I don't want to sound dismissive. It's a pandemic and people are dying and it's terrible. But that said, that's how investors think.
Yeah, so tell me a little bit. Let's get into the investor brain there for a second. You know, how does an investor think and what do they look for when they invest during a pandemic and during normal times?
I'm going to restrict this conversation to the world of early stage tech startups as opposed to investing more broadly, because that's, I assume, what you want to focus on. So there are a couple of things that VCs specifically are looking for. One is resilience, right? All startup business plans are wrong. All projections are wrong. That's the only thing I can say definitively about them. And so you need people who can adjust and listen to the market, listen to their advisors. That's particularly true in a pandemic where no one really knows what's going to happen, how to deal with it. There are a lot of unexpected difficulties. And this is the mark of founders in particular, as opposed to people working in an established company with established processes where the process you have to go through is much more predictable. Another thing that people are looking for is entrepreneurs who are taking advantage of dislocation. One of my tests of whether I should invest is what has changed in the world that makes this an attractive investment. 20 years ago, Airbnb would have been a bad investment because who would trust random strangers to let you sleep on their floor, right? But Airbnb was actually a great investment because at the time they launched, people were more comfortable trusting strangers, diligencing strangers online, and that they were taking advantage of a change in social behavior. So right now we see various changes in social behavior. Most obviously people are working more from home. They're much more interested in cooking. They're much more interested in entertainment that does not require leaving home. And so people take advantage of those and other dislocations will benefit.
Yeah, so does that involve pivoting to an extent for some businesses? Because some businesses, have trouble pivoting in this type of environment.
It might require pivoting. And that's a great advantage that early stage companies have is they're not overly wedded to the original business model. I know a company that was in the tampon business and they pivoted to face masks, right? Makes sense. There's a huge need for face masks and
Sure.
that market is growing whereas tampons are flat. So you, as a early stage entrepreneur, that's how you should be thinking about it is you have one huge advantage, which is agility, exploit it.
Yeah, so one of the things that came out of the Great Recession, David, was a lot of people started businesses because they were unemployed, and now we're seeing unemployment rates perhaps go higher. Is this an opportunity for you, if you're sitting at home idle, to get your side hustle on?
So let's put it this way. Again, for the people who lost their jobs, that's a really bad thing, and I'm sure the vast majority would like to have kept their jobs. That said, if you're in the position of job searching, it's going to be really hard for most people to find a new job. So it might be time to think more seriously about starting a company. The good news is the cost of starting a company has trended down to the cost of being unemployed. There are endless educational resources online free on how to start a company, my blog and many others, Teten.com, where you can get very, very granular insights into all the different issues you have to address in building a new company. And it also is defensible from a resume point of view, right? If people say, oh, you did a startup and it failed, if they say, oh, you did in 2020, you have a very good explanation, right? You couldn't get the traditional job that you might have had prior to this global shutdown.
Yeah, the past generation, a lot of the people we interview, and I interview entrepreneurs for a living, a lot of them started their businesses during the Great Recession, and it was because they really had no other choice. And funny enough, because of quantitative easing and other sort of financial measures, it kind of was the golden age of VC back then. Perhaps that's coming again.
Uh, well, I think the big difference is in hindsight, that was actually a relatively minor blip in the scale of things, whereas this is indisputably a global crisis. And so I don't think it's going to look like that in hindsight. That said, there will certainly be investors who do very well, potentially extraordinarily well, by investing during this period.
Well, David, do you have any other advice for entrepreneurs who are, thinking about surviving, thinking about growing, thinking about thriving in this new environment?
Well, one point I want to emphasize is historically, if you're a B2B business, you're selling to businesses, you're very reliant on in-person sales. And traditional model was you had to spend a lot of money on conferences, on plane flights, and so on. And I actually wrote a book way back in 2005 around how do you sell online? How do you build business relationships online? I think people should not be shy at all in building a B2B business without leaving your home, because you can do that. People are much more comfortable nowadays building relationships on Zoom, on all the other tools that are readily, freely available to acquire new customers. And that can allow you to build a significant business and take advantage of the fact that there are a lot of people who work for the companies who have less work, right? But they're not getting laid off. Morgan Stanley said, we're not laying off anyone in 2020, which is great for Morgan Stanley employees, right? Some of those people are super busy. Some of them are less busy, right? Because the economy has changed. And now might be a time when you could actually have a higher odds of getting a conversation started and potentially selling them on your new product.
Well, David, thank you so much for the advice, and all the best to you and your family.
Thank you so much. Good luck. Stay safe.